In this video, we'll take a look at Redwire Corporation, which is a company that builds space infrastructure. Redwire specializes in components like space station modules, satellite platforms, and docking systems. Interestingly, they're also developing biotech manufacturing technologies that utilize microgravity environments. While Redwire doesn't launch rockets themselves, they play a crucial role in providing the hardware that makes space missions possible. The company works with public space projects like NASA, collaborates with private sector clients, and has recently expanded into defense-related satellite technologies. And with their 2025 Q1 earnings recently out, let's break it all down. Alright, first of all, their earnings for Q1 2025, Redwire reported $61.4 million in revenue, which is a 30% decrease from the same period last year. But the company also significantly reduced its net loss to $2.9 million compared to an $8.1 million loss in Q1 2024. That's meaningful progress. Of course, a 30% revenue decline is pretty eye-catching, but the primary reason was delays in U.S. government contracts. Leadership transition at NASA and shifting budget priorities under the new administration caused project timelines to slip. On the upside, Redwire's earnings per share (EPS) loss was smaller than expected, and adjusted EBITDA, which excludes taxes, depreciation, and amortization to show core business profitability, improved significantly from $9.2 million loss in the previous quarter to just $2.3 million this time. Even with falling revenues, Redwire isn't slowing down. The company is aggressively preparing for future growth through its expansion into Europe, biotech manufacturing in space, and a major acquisition, Edge Autonomy. Now, while U.S. contracts are being delayed, Redwire is seizing opportunities in Europe. The company recently opened a new office in Poland and secured several major contracts with the European Space Agency, ESA. Notably, they won a contract to develop docking systems for ESA's lunar IHAB module and a study contract for the ARRAKIHS, Dark Matter Exploration Mission. CEO Peter Canito emphasized that Europe's growing space and defense budgets are creating new opportunities, in some cases even faster than in the US. Now, Redwire is also expanding into biotechnology manufacturing in space. Using its PIL box platform, the company conducts pharmaceutical crystallization aboard the International Space Station, ISS. Recently, Redwire signed a contract with Aspera Biomedicines to develop a new cancer treatment in microgravity. But you might ask, why manufacture drugs in space? The answer lies in purity. In microgravity, molecular structures crystallize more uniformly, allowing for the development of more precise and effective treatments, especially crucial for advanced therapeutics like cancer drugs. Additionally, Redwire signed a MOU with iSpace US to jointly pursue NASA's CLPS lunar transport projects, which are worth several $billion. On the defense side, Redwire is acquiring Edge Autonomy, a specialist in autonomous drones and surveillance technology. Regulatory approvals are complete, and the deal is set to close in Q2 2025 after a shareholder vote on June 9th. With this acquisition, Redwire will evolve from a pure-play space company into a space plus defense tech platform business. Edge Autonomy's drones are already battlefield proven, adding a lucrative and high growth segment to Redwire's portfolio. Defense contracts typically bring long-term revenue and higher margins. Also, Edge Autonomy's strong foothold in the European market aligns well with Redwire's global expansion strategy. Redwire ended the quarter with a record $89.2 million in liquidity, thanks largely to an $82.9 million warrant redemption. This not only strengthened the company's cash position, but also cleaned up its capital structure. But free cash flow was negative $49.1 million, mainly due to one-time litigation settlements and M&A expenses. Another point of interest is the $3.1 million in EAC, estimate at completion adjustments, which is a re-estimation of total project costs, which are common in early-stage technology development. While these can hurt margins in the short term, they're often resolved as products stabilize and scale up. So, in short, Redwire is in an investment-heavy phase, taking on short-term losses to secure long-term growth. Despite current challenges, Redwire has reaffirmed its 2025 full-year guidance, including the impact of Edge Autonomy. The company targets $535 to $605 million in revenue and $70 to $105 million in adjusted EBITDA. These targets, of course, assume successful integration of Edge Autonomy and a resumption of delayed contracts. Redwire stock has been on a volatile journey. After trading around $2 early last year, it surged to mid-$20 range, followed by a correction. Following the latest earnings report, the stock dipped slightly, but has since shown signs of recovery. For investors, 4 key factors will determine Redwire's trajectory. First, how smoothly the Edge Autonomy integration goes. Second, how effectively the $6 billion project pipeline converts into actual revenue. 3, managing EAC-driven margin pressures and restoring profitability. And 4, sustaining momentum in Europe's space and defense markets. So, to sum up, Redwire is positioning itself on 3 strategic pillars, that is, space infrastructure, defense drones, and space-based biotech. If the U.S. stays committed to space industry growth, as echoed in political rhetoric by Trump, Redwire's long-term prospects could be quite compelling. So that's it. What do you guys think about the near-term or long-term future of this company? Leave your thoughts in comments below. All right, subscribe to my channel if you haven't already, and have a good day. Bye-bye.